All you investors out there, pay attention, because in this video, I'm going to be going over exactly why I believe that investors could potentially go bankrupt if they did not do enough due diligence in the past couple of years because of the rising interest rates.
Universal donor.
What's up, everybody? Welcome back to my channel. My name is Evan Phoenix, and this channel is all about real estate investing. If that's something that you're interested in, go ahead and go down and subscribe to this channel. Okay, it's no shock. Everyone that is in real estate right now knows that the interest rates are rising, and if you are too busy renovating your properties and have a lot of projects going on at one time, it may have crept up on you just a little bit. So in the past 3 to 5 years, if you purchased a rental property with an adjustable rate loan, such as a 513-171 ARM, you may be getting a little nervous right now. But just in 2022, the Feds raised the rates 5 times. Not only did they raise it 5 times, it was a substantial increase every single time. September 21st, it was 75 basis points. July 27th, it was 75 basis point. June 16th, it was 75 basis point. May 5th, it was 50 basis points. And March 17th, it was 25 basis points. So to give you some perspective, back in March of 2022, you could get a loan for close to 4.5% interest, when now in early October, the time of recording this, you're hovering around that 7%. To give you an idea of the difference, if you purchased a $300,000 home with 20% down and a 4.5% interest rate over 30 years, your principal and interest every month would be $1,520.06. Now let's change it up. Let's do it with the same example, but with a 7% interest rate. Your principal and interest would be $1,995.91 a month. That's an extra $450 a month and $5,400 a year that is eating into your cash flow. If you purchased a property expecting a $400 cash flow every single month, that is now eliminated, and you're probably spending money each month just keeping the problem up. Now, cash flow is not the end all be all, but cash flow tends to keep your property afloat while we go into times like this, which is technically a recession. And since now your cash flow is just eaten up because you have to refinance out of that variable rate loan, you now have a 7% interest rate and you have no cash flow. You're paying money each month. Now, that might not sound too bad if you just have one property, but figure these investors that have 20, 30, 40, 50 properties, and that's all happening on them. Now, the main people that I see getting affected by this the most are people that took out short-term adjustable rate loans. Like I just mentioned previously, 1 or 2 deals is not going to kill you, but if you did a large syndication, you're taking other people's money and investing this and really relying on the cash flow and refinancing out of the property, this is going to be a huge deal. A lot of times these investors will take other people's money, purchase a large multifamily property, raise rents, raise the income of the property, and decrease the expenses, which would raise the net operating income. The higher the net operating income on these commercial properties, the more the property is worth. Then after turning over and stabilizing the property, they would then go to the bank, take out another loan to refinance out of their investors' money, pay back their investors, and keep the profit. But let's say you underwrote the deal and originally you got 4% interest rate on your loan product. And when you underwrote the deal, you thought at the refinance it would only be as high as 5%. Now coming to realize that when you go to the bank, it's at 7%, and you're at the time where you need to refinance. Now, typically investors that are doing this, they're not just doing one project at a time. They may have 2, 3, 4 projects at a time. So let's say for all of these properties, they underestimated the interest rate when they go to refinance out. And now they're stuck kind of in a hole where it eliminates the cash flow that they're expecting. And they may not be able to get the evaluation that they wanted on the property because of the rise of interest rates and the lack of demand for their rental properties. Now, a way to protect yourself moving forward in these crazy times that we're in right now is to bump up your cash reserves. Typically on a property, you would want about 3 months of reserves. I've seen as much as 6 months as well, but right now I am going out and having 6 to 9 months of reserves just in case something like this were to happen. It's easy to see that cash in your account and want to deploy that to purchase another property and make more money. But with the interest rates fluctuating as much as they have been, so with all that being said, have a higher cash reserve so you can weather this storm that we're going through. Now, the biggest thing to take away from this video is that debt is the cash flow killer. What people don't understand and don't spend more time on is the actual debt of the property. Most times when you purchase a larger rental property that's a commercial property, you'll have to put shorter financing down on the property. So within 5 to 10 years, you'll most likely have to refinance out. I always suggest going the route of the fixed rate product just because it may be a little bit higher interest at the time, but you know exactly what you expect. And typically a fixed rate you'll be able to get for 20, 25, 30 years. So you'll be able to hold on to that knowing exactly how much your debt costs you every single month. Whereas where you do adjustable rate loans, then after 5, 7, 10 years, you're going to have to refinance out whatever the market's at that time, which in this case could be a lot more than what you actually put on the property. I hope that I am wrong, but with these interest rates right now, it is absolutely insane. Thank you everybody that watched this video and listened to me. If you like this video, please go down and like it and subscribe to my channel for real estate investing content. And I'll see you guys in the next one. Peace.